Welcome to the Wealth is in the Details podcast. In this podcast, financial planner Peter Raskin helps families and business owners understand and prepare for their wealth journey. Along the way, thoughtful and detailed planning can provide clarity and confidence as clients confront a multitude of financial decisions. Listen in as Peter shares stories and insight into people's wealth journeys. Now, let's get into today's podcast.
Hello and welcome to Wealth is in the Details with Peter Raskin from Raskin Planning Group. Today, Peter has brought in a special guest, and that is Bob. Good morning, everybody. How are you?
Good morning.
All right,
How are you,
Pete.
Eric?
I'm good. I'm doing very well. I'm excited to hear what Bob has to say and why you've brought him to the podcast, but we'll get into that in a minute. Peter, in recent podcasts, you have talked about contingency planning as an important part of an overall comprehensive financial plan. You've done a lot of discussion and discussed planning for the unexpected and focused on topics like investment and inflation risk, unforeseen expenses, life insurance, long-term care, Medicare, a lot of stuff. And I know today's topic is another aspect of contingency planning. And I'm assuming that's why you brought Bob today, right?
Exactly. Yeah. Today we're going to have another insurance-related topic. And I just want to tell my listeners that, no one likes spending a lot of time thinking about all the bad things that can happen. Certainly no one wants to really spend money on insurance. But unfortunately, in the society we live in this economic system we have, it's just a prudent thing to consider. So my sense is if you can afford the risk and accept the consequences, maybe you don't need insurance. But my sense is that most people would rather pay a relatively small premium in order to insure a big potential risk. So today, we'll be talking with an expert in the area of property and liability insurance. I've had the pleasure of knowing Bob Mansfield since we were in fourth or maybe fifth grade.
Wow.
In Wayland, Massachusetts, playing Pop Warner football. And Bob, I think you'll agree that those were the highlight years of our football career.
Absolutely.
Bob is a senior vice president of Hub International, one of the largest insurance brokerage firms in the country. And he's been honing his insurance skills for at least 35 years and works with both personal and business lines. And Bob, thanks for joining me today. It's really a great honor to have you here.
Glad to be here with you, Peter.
Sure. Bob, since we'll be focusing on just a few things that our listeners may want to consider when it comes to protecting property and financial assets, let's start off and just give me your general thoughts about insurance and how it fits into our clients' overall financial plan.
Well, Peter, as you said right at the beginning, that we live in a litigious society, and people need to worry about the big risks. And I don't know many people who can afford the big risks. And that's where insurance kind of has come in to help families and individuals with their insurance needs. And they need to protect their assets, not only their current assets, but their future assets, future income, from physical losses to their property, liability claims from third parties. And so when I look at insurance, I really look at three major things that every family needs: homeowners or apartment or renters insurance, automobile insurance for their vehicles, personal umbrella insurance, which I think is the most important from a property and liability standpoint. And then if you have a boat policy.
Right.
So those are kind of the three keystones that people should be aware of and understand.
Yeah, I think that's right. When I look at it, I think about it as the foundation, the base of your protection that we all need. Mm-hmm. So a prospective client calls and wants to review existing coverages. What's your process? What are the red flags you look for, the most common mistakes that you might see?
Well, we look for right away if they have a personal umbrella policy. And it's amazing. It's 2019. And I still find people who, they think an umbrella is just something you carry in the rain. And that to me is the most important policy. So we obviously look at that. And if they don't have one, they're amazed at how inexpensive it really is for a $1 or a $2 or $3 million personal umbrella. But, when we get a new, customer or client, we look at their assets. First off, what do they own and what needs to be covered? Fire, theft, etc. And some of the common mistakes are they don't have a personal articles floater for their most valuable possessions: jewelry, silverware, fine art. So I think that's the second mistake we find. Not only is there maybe no umbrella, but they don't have their most valuable articles covered properly. And probably the third is that their deductibles are too low. You mentioned the big risk is what you should be paying insurance for. We still find people with a $250 deductible on their homeowner's policy or even a $500 deductible on their auto. People can usually afford, hopefully, those small claims, but they can save premium year after year with a higher deductible.
Yeah. So it's kind of putting it all into perspective for those clients that might have adequate cash flow to meet those smaller claims. Well, you can self-insure that.
Exactly.
But it's the big ones that we really have a hard time predicting and insuring. And it's expensive.
And the big ones, when I think of insurance, hurricane, tornado, lightning, flood, and a car accident. I mean, those are the big ones that you don't want to. You want to understand what your limits are and what could potentially happen to you.
On the umbrella insurance, could you give a kind of a general sense of what falls under that and why someone would need it or want it?
Anyone who owns a home with a swimming pool, especially a car, a boat, a personal umbrella is almost necessary because, and when I think about an umbrella, I think about the worst case scenario and why you should have one. And that's an auto accident. Everybody has gone through a red light or run a stop sign without even realizing it. I know I have, and people
have as well.
People aren't perfect drivers. Or they're driving home and there's sun in their eyes. It's at 5 o'clock and there's a jogger or a bike rider that they just missed. And they went, oh my God, I never even saw that person. Well, an umbrella is really peace of mind insurance because if there's an unfortunate accident, not everybody's a perfect driver, the umbrella will sit on top of your auto liability limits. And that's why I think an umbrella limit is the most important decision that an individual or family has to make. If you own a vehicle or you're driving a vehicle and you hit somebody, it could be bad. It could be serious. It's probably the most dangerous thing anybody ever does every day is get in their car. And the value of a human life is $3 million. At least that's what on an airplane crash is. So a good attorney, if you're at fault, is going to try to do the best for their client and for their pain and suffering or their injuries. And that is where the peace of mind comes in. If you know if you're in an auto accident, the first thing you're going to say is, what's my umbrella limit? Because you feel bad as it is that you may have caused the accident, but you don't want to worry for the next 3 to 4 years while you're wondering, well, what could this person come after me for? And that's what a personal umbrella covers. And I think of an at-fault auto accident as probably the most damaging potential claim against somebody.
So these are claims that might not be covered because your limits on auto and your traditional auto policy are just so much lower.
Right. Your traditional limits on an auto policy are $250 per person, $500,000 per accident for bodily injury, and $100,000 for property damage. If you hit a $300,000 Lamborghini, that wouldn't be enough. And then your typical homeowner's limit is $300,000 for personal liability, and your watercraft is a $300,000 limit. So those are the basic limits that you buy on your basic policies, but they won't be enough in a tragic accident.
Yeah.
And that's why, and it's so inexpensive. Like a $1 million umbrella for a home, and someone who owns a home and 2 cars is only $180 a year. It's the least expensive policy of the 3 I mentioned, and it's the most important.
Right. It just covers you for those truly unexpected, horrible events. I always give the example as someone is at your home, a friend of a friend comes and slips on the front steps, on the stairs, and they sue you.
They don't want to, but they feel bad, and they know an attorney, or an attorney knows them, and they say, you really should do something. You can't work for the rest of your life.
Yeah.
And they have no choice but to.
Yeah. Does the umbrella also cover attorney fees?
Sure. It covers defense expense, attorney fees, and any judgment if you're found to be negligent.
Yeah.
Yep.
That's
another reason.
Right, exactly. So it's relatively a small cost and a tremendous peace of mind. Mm-hmm. So that's really good to know.
And one other thing, speaking of assets, when we look at a person or a family and we try to decide what is the appropriate umbrella limit, we look at their net worth. If they have a $10 million net worth right away, we'll say, well, maybe you should think of a $10 million umbrella. I mean, that's one of the easy ways of trying to figure out how much of an umbrella I should carry. Mm-hmm. You're just trying to protect your asset.
Yeah, it makes perfect sense. Bob, you mentioned earlier some other coverages, flood and earthquake coverage. We live in New England. Is that really necessary?
I used to think flood was only necessary if you lived in a flood zone. And talking about other things that we look for, that might be missing in people's insurance program is flood and earthquake are always excluded from a homeowner's policy. A lot of people don't know that. You have to buy it back. And flood insurance, if you have a mortgage, a lender will require you to carry flood insurance if you're in a flood zone. So right away, most of the people that buy flood insurance are required by their bank or their mortgage holder to purchase it. But if you don't have a mortgage or you're not in a flood zone, I would say 99% of people don't buy flood insurance.
Right.
So, and I used to think, okay, you're not in a flood zone, you don't need it. But then Vermont happened. You remember the floods in Vermont?
I do.
And even a few years ago in Wayland. Just because you're not in a flood zone doesn't mean you might not get flooded. I guess if you live on a mountain or at the top of a hill, you may be okay. But, flood insurance should be understood that you don't have it unless you buy it. And if you don't buy it, it's because you don't need it or you don't want it or you don't expect it.
Yeah.
And it's very inexpensive if you're not in a flood zone. If you are, it's a little pricey. And then that's the people on the Cape and the people on.
Yeah, but if you're in a flood zone, that's because your risk is that much higher and you should probably buy it.
And the people who have claims usually have them over and over again because it keeps happening. Earthquakes, on the other hand, I would say maybe less than 10%, maybe 5% of our personal lines customers buy earthquake. Because first of all, here in New England, we're not in California. They don't happen as often. But Boston was hit by a major earthquake in 1750. And we are supposedly in a 300-year earthquake zone. So between now and 2050, there could be an earthquake in the Boston area. I just have to realize you don't have earthquake unless you buy it back. It's maybe $180 to $200 more a year on your homeowner's policy in this area to add it. And some people just want to cover for every potential thing. They'll add earthquake to their policy.
Sure. Like, why not? At that level of cost, I just think it's, what you don't want to be with insurance is penny wise and pound foolish. And you don't want to second guess yourself. So why not include it?
And I'm always afraid of the big thing. And so I don't want to go to someone and say, well, geez, we didn't have an earthquake. And after the earthquake.
Right.
And try to explain that one. So I always mention that one with flood.
Yep. I think it's prudent to at least consider it. Bob, as far as auto insurance is concerned, could you talk about any concerns or things that our listeners should really be concerned about and consider?
Well, auto insurance, the first thing they should consider is carrying the minimum limits that are required for an umbrella. So that way, if they can qualify for an umbrella, they don't have to buy an umbrella, but at least they'll have the $250,000 per person, $500,000 per accident coverage for bodily injury, and $100,000 for property damage. Those limits, I think, are a minimum for anybody to consider, and then they're eligible for an umbrella. But if you speak to attorneys, and I've had clients who are attorneys, they will tell me the most important coverage under a personal auto policy that anyone should have is the underinsured and uninsured motorist coverages. I mean, those are compulsory. Massachusetts, you have to get minimum limits, I think, are $20,000 per person, $40,000 per accident. But you can increase those limits to the limits you carry as a third-party limit for others. So basically, these coverages cover yourself. Every other liability coverage covers somebody else that you may hurt. And my feeling is if you should at least cover yourself for the same amount as you're covering somebody else. We always look at the uninsured motorist coverages because if someone is injured in an auto accident and it's caused by a hit and run driver, which can happen, or an uninsured driver, you may get in an accident with someone who doesn't have insurance because they didn't pay their premium or they were canceled. And it's not your fault and you get seriously hurt, you cannot really go after their insurance or them because they may not have any assets, especially in a hit and run situation. But if you have uninsured motorist coverage, you're covered for your lost wages. You may not have disability insurance. This will help you pay for your lost wages, any uninsured medical bills or rehabilitation expenses that may not be covered by your health insurance. It's a great coverage for you when that situation happens. And the underinsured coverage just means somebody may have just minimum limits. They have 20-40 limits and that's it. But your injuries or your lost wages and lost future income are much greater.
Sure.
So I think that's a coverage that we look at carefully.
And what's the additional cost for that kind of coverage typically?
That isn't that expensive. It's not like comprehensive collision. It's maybe $50 for one part and another 50 for the other.
Oh, that's it. Wow.
Depending what limit you purchase. But the minimum limits are usually too low.
And the chances that you'll be engaged in an accident with someone that doesn't have insurance or is underinsured are, I would think, fairly high.
Well, it can be, especially if you're like in another state like New Hampshire or a state where they don't require insurance, auto insurance. You could be hit by someone with no insurance, or a lot of times you may be getting an accident with someone who just has the minimum limits that are required by that state. And that's really not going to be that much if you have a serious injury.
Yeah. Okay. Well, that's interesting. Thanks. How about for valuables, property, valuable property that is probably both valuable and sentimental, whether it be jewelry or pictures or, how should we think about those items? How should we insure them if we should?
You should definitely consider it because homeowners policies are designed for and priced for the average homeowner. So rather than homeowners companies charging you for a lot of jewelry and paintings and silverware, which you may not own, they provide limited coverage for those types of valuables. And if you are someone who happens to have a lot of jewelry or silverware, then you buy back coverage. And certain valuables like jewelry, silverware, fine art, paintings, oriental rugs, they're not really covered properly for theft or mysterious disappearance by a standard homeowners policy. Therefore, we ask this question, what do you own in terms of those types of valuables, and would you want to insure them? A personal articles floater is how you insure it. It's added right to the homeowners policy, or it can be written on a separate policy. And I like it because there's no deductible and mysterious disappearance is covered. And this could be for baseball card collections, coin collections, paintings, obviously engagement rings and diamonds and things like that. And there's some of our clients have a large amount of jewelry they keep in safe deposit boxes. The rate is a lot lower. And they only call when they take it out of the safe deposit box.
So people can insure their baseball card collection. Do they need to get it valued before actually insuring it?
Yes, they need an appraisal, and sometimes the cost of the appraisal is more than the cost of the insurance, unfortunately. But when you buy jewelry, I always say get the appraisal at the jeweler, while you're buying it, so you get that appraisal for free. But if you have something you're not sure what it's worth, we have appraisers that we recommend to people, and then you can decide. But I think you need the appraisal because after it's in a fire or stolen or it's missing, how are you going to prove what it was worth without the appraisal? So whether you insure it or not, you need that appraisal at least to be able to even consider it.
Yeah. I know my father was looking through his stuff recently and wanted us to have my mom's engagement ring and a great aunt's engagement ring. And he wanted me to hold these items for the family. And so the appraisal was more costly than the insurance.
Yeah.
But it was something that my dad wanted, and it was easily done. And
it makes it easier when there's a claim because it's already scheduled on the policy. You know what is a description and a value. And if it's missing, and I've had this many times, a ring will disappear, dropped in the car or dropped off the side of a boat, and they just replace it based on the appraisal.
Okay.
No questions asked.
Do as far as making claims, do claims on these kind of policies, do they eventually increase your costs?
Well, in Massachusetts, I can speak for it mostly. If you can't really get, and you may lose a no loss credit that you might get on a homeowner's policy if you a loss-free credit that you may be getting and earning year after year. But other than that, they can't really debit your policy or give you a surcharge because you have claims. What happens is, and I think all homeowners carriers have the same underwriting playbook. If you have 3 claims in less than 3 years, they just non-renew you. I mean, that's just the typical way that they deal with it. And then you go to the fair plan for a couple of years. You can always get coverage. It's the same rates as everybody else. And then you go back to the voluntary market. So we never discourage somebody from putting in a claim. But if you have $1,000 deductible and it's a $1,200, tree hits the fence or hits the roof and it's $1,200 to repair, we probably would say, and if you've had a claim already that year for something,
you may not want to.
Want to put it in. But certainly, and that's why we like large deductibles, because most people won't put in $1,000, $1,500 claim anyway.
Yeah.
So why not have a $2,500 deductible all year, every year, and save that premium and only have to put in the larger claim. But yeah, that can happen. That's not good.
Yeah, sure. Unfortunately, it's happened to me.
Yeah.
So.
And it can happen on the auto insurance. The way the auto insurance works, that, if you get a speeding ticket or an at-fault accident, you get a surcharge.
Yeah.
So they do increase your premium. But if you have a really, really, really bad driving record, like 3 or 4 driving under the influence situations, then there's an excess market, or it's a assigned risk market called car that you'll be put in, but it will be more expensive. Be like double than what you know. But most of the time, you have to be really bad driving record to have to worry about that.
But Bob, I always think this is just incredibly valuable to so many of our listeners. Could you spend a few minutes talking about Hub and what makes you guys different from other brokers and how you serve your clients over the years?
I think we just try to do the best job we can in understanding our client's needs. I think that comes first. That's just the way we do business. And that means, getting to know the customer and the client, knowing what their assets are, knowing what their goals are, making sure that, we're listening to what they need, and also educating them. I think more than anything, making sure they understand every piece of their personal insurance program and making suggestions on when they don't have certain things if they haven't had them in the past. So after we do that, then this is where I like Hub. Hub being the largest broker in New England and the 6th, I think, largest now in the country. We have access to more carriers probably than a smaller brokerage. So that at least gives us more carriers to go to get better pricing or get the most competitive price for our clients. And that ultimately will benefit them.
And do you see that there's a significant difference between certain markets, whether it be a house on the water in Chatham versus a 3-family in Boston? Do you find that there's a difference amongst the carriers? Would they approach those carriers with those insurance needs differently and price their products differently?
Absolutely. Every homeowner's carrier has certain territories and regions that they like to write in. And, you'll find some like Narragansett that love writing on the Cape. And then you'll find Andover that won't write on the Cape. So, and I think the key to all of this is this hurricane and windstorm models that have come out in the last 10 years. And I don't know if you remember the no-name hurricane. It was back in the 30s, and it destroyed 10 million trees, and it came up into New England. Well, if that happened today, homes are where those trees are. And so the insurance carriers don't sleep at night. They think about the worst-case hurricane roaring up the coast, and what would be our loss? Liberty Mutuals has a huge amount of book of business. And, a lot of these carriers say, well, we don't want to have too much of a exposure to coastal properties. So if you're a 3-family in Boston, but you're in Brookline versus Winthrop or Charlestown, you probably will have different companies who will be interested in writing that insurance. And on the Cape, it gets even harder because a lot of carriers have retreated from the Cape due to their reinsurance costs being too high, that you have Chubb, Narragansett, and other carriers that love writing them. So you really have to look at each individual's situation and find the best match, the best carrier that wants to write.
At that point in time.
And I don't think it's going to get any easier as, global warming keeps bringing bigger and bigger storms and more and more events. But the more carriers you can offer, the better you are in finding the right match.
Sure. Yeah, it makes perfect sense. Bob, how do our listeners reach out to you and ask questions? How would you work? How would they engage you to either just get information or for you to take a look at their coverages?
Any of your listeners can reach out to me directly, like by email or by my cell phone. I can give it to you.
Yeah, no, why don't you if you wouldn't mind giving your telephone number
Well,
and email.
my cell phone, which is always available by text or phone, is 508-277-9317. And my email is just robert.mansfield@hubinternational.com.
Great. Well, Bob, this has been a great pleasure for me, and really appreciate you coming in and doing this podcast with me. And I think the information you provided was really valuable. I always learn something when talking about these areas of insurance, and just really thank you for spending your time with us.
Oh, you're very welcome. It's a pleasure to be here.
Great.
Thank you.
Guys, this was fantastic. I've learned that, all these Lamborghinis that are zipping around Omaha, Nebraska, I've got to watch out for. And
well, not if you have an umbrella.
Not if I have the umbrella. That's right. I will carry my umbrella for sure.
Keep that peace of mind.
That's right. Keep that peace of mind. Thank you, Bob. This is great information. Thank you, Peter, for bringing Bob in.
Thank you for having me.
Thanks, Eric.
You bet. And thank you all for listening to the Wealth is in the Details podcast with Peter Raskin. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Peter comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your friends and family. Again, thanks for listening today. For everyone at Raskin Planning Group, this is Eric Johnson reminding you to live your best day every day, and we'll see you next time.
Thank you for listening to the Wealth is in the Details podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Lincoln Financial Advisors Corporation. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Peter Raskin is a registered representative of Lincoln Financial Advisors. Securities offered through Lincoln Financial Advisors Corporation, a broker, dealer, member SIPC. Investment advisory services offered through SageMark Consulting, a division of Lincoln Financial Advisors, a registered investment advisor. Insurance offered through Lincoln affiliates and other fine companies. Raskin Planning Group is not an affiliate of Lincoln Financial Advisors. Lincoln Financial Advisors Corporation and its representatives do not provide legal or tax advice. You may want to consult a legal or tax advisor regarding any legal or tax information as it relates to your personal circumstances.